morning. Today is Thursday, April 18th, and I want to revisit a couple stocks that we were looking at yesterday that did not set up. Okay, if you recall, the first one is Energy Transfer Partners, ETP. Let's see, ETP did not set up, as you can see here. Market never took out this high. Market instead made a lower high and a lower low. We're still sitting at the 50 exponential moving average. So if the market is able to take out yesterday's high today, I would still be looking to go long. Okay, and that price, if you recall, is let's see, 48.30. 48.30 would be a buy. So you're looking to go long at 48.30 if the market can take out 48.20, right, by 10 cents today. Now the initial stop loss on that, assuming yesterday's low is intact, it will be below yesterday's low. So it just depends. So if the market opens up, rallies up through it, my stop would be directly below the low of yesterday, creating an outside bar or an engulfing pattern if it were to reverse on an intraday basis. So I'm still looking at ETP. The next stock that we looked at yesterday was YUM, Y-U-M. As you can see on this, the market is still consolidating. Market never took out the high of yesterday. Okay, came close but never did. So on this particular trade, I would be looking to go long at 66. I'd go 67.01. 67.01 would be the buy. And again, the initial stop on this, it just depends. I mean, if the market is unable to take out yesterday's low, let's say it opens up right in here, 66.41, and rallies up, my stop would be below yesterday's low as long as yesterday's low is not penetrated first. If yesterday's low is penetrated first and then it rallies up through the high of 2 days ago, then my stop would be below that low. So again, I'm still looking at those. Now, another market I'm going to look at here is the ETF of gold, GLD. Again, GLD. Now I know this. Look at this. This market's been down. Technically, based on really everything that I do, gold has turned down way up in here. Okay, back in December, right? December of last year. Is when it turned from up, right, green bars, to down right in here. Actually, it turned down officially, again, according to everything I do, on December 6th, when GLD was trading at about 164.50. Now it's 132.87, right? So gold's made a huge drop since it turned down based on everything I do, okay? Now, I know the trend is down. I know you probably want to be short on big pullbacks, right? Mid to upper band, that's way up in here. But this is a little bit more of an aggressive trade, I guess you could say. And I guess some of you are going to say, well, gosh, you're totally bucking the trend going against everything. But let me just outline something that I'm looking to do. You don't have to do it. Just watch and see what happens. As you can see on this particular chart, the market has started, well, after this huge gap that we got from Sunday to Monday, right? Big gap. Market's traded down big time. We created a tight little inside bar on Tuesday, and then yesterday we had another inside pattern. See that? So we have two consecutive inside patterns, okay? So this is what I'm going to look to do on gold today. Okay, on the ETF GLD, okay, I'm looking to go long above yesterday's high. Yesterday's high is 134.95. I'm looking, since it's over $100, this ETF, I'm looking to go long at 135.15. 135.15 would be the buy, right? 20 cents above yesterday's highs, right? So 20 cents plus 134.95 is 135.15. And it would still have to clear Tuesday's high by 4 cents to get me long, because that high is 135.11. Okay? So that's where I'm going long if the market proves it wants to go higher by penetrating up through 135.15. Okay, my initial stop loss on that, like I talked about the two stocks, would be so assuming that yesterday's low is not taken out first, it would be below yesterday's low of 132.32 to 132.12. So I'm going to go 132.12, assuming that that low is not taken out first. It looks like GLD is going to open up at about 134.08. So it just depends. If the market takes out the low of yesterday first and then reverses and takes out yesterday's high, that would even be more powerful. And if that happens, then the initial stop loss will go below the intraday low of whatever that low is. So again, if the market opens up at 134.08, trades down through yesterday's low of 132.32 to, let's say, like 132.10, I'd go 20 cents below that. Okay, so on the other side of the coin, if the market takes out the high first and penetrates up through 135.5 to 135.15, I'm going to be long there with an initial stop loss at 132.12, which is below yesterday's low. So I hope you follow me on that. Okay, so those are the three things that we're looking at. If you can look right down here on my watch list window, label trade setting up right down in here. These are the three that I'm looking at. GLD. Right, looking at 135.15. Then we've got the Yum brands, YUM, and then ETP. So those are just a couple that I'm looking at. They're on my watch list. We'll see if any of them penetrates or executes to the upside. Okay, let's go to, quickly, wrong chart. We'll go to the E-mini daily, the daily E-mini S&P 500 chart. All right. Again, look at where we're sitting. Let's take this up to below, right, these lows right here, right? The low that was put in place on the 19th of March and then the low put in place on April 5th. Those are big lows. If we start penetrating down through those lows, we'll be breaking down through the hot pink line, which is the 50 exponential moving average. So I'm paying close attention to these levels. And if the market's unable to break through these levels, I would be looking to go long because we've had a nice pullback. And if you measure from this year's low to this year's high, which is an all-time high, by the way, as you already know, we're really getting close to that 38.2% retracement, right? Right? See this? Right down here, about 1534.5. So I'm paying attention to this real closely. Very tempted to buy the SSO, which mirrors the E-minis, which is the index two-time fund. Okay, hope that helps. Have a profitable day. Bye for now.